All right, traders, a very warm welcome to you all. I am Devang from the Financial Analyst, and today I want to talk about three things essentially. The first one is what is a trading plan and is it important? Number two is how do I select stocks for my intraday trading? And third one is what is a logical place to put a stop loss? These are the three things I want to answer. And the reason we do these videos is because a lot of people send us messages on Instagram, YouTube, or even WhatsApp on our phone number. So you can do the same if you have any questions, if you want us to analyze some charts, and we'll help you out by making videos and trying to enhance your trading journey. Okay, so let's get started with the first question is what is a trading plan and is it important? What is the significance of a trading plan? So before I get started into that, let me tell you something, some facts about the current 7-8 months of the markets. The market volatility has increased. The reason is there has been so much liquidity now. It's been a record high in liquidity, if you ask me, because in this COVID, when this COVID issue started around February to March, the number of demat account that opened was a record high. So there has been a significant push in liquidity, which has led to so much volatile markets. And the thing is, I wouldn't say these traders, the new traders that have come in, who have graduated from colleges, etc., are not good at trading. They might be. They have good knowledge, fundamentally, technically, but everyone, I would say the 90% traders who fail make this same mistake, and that is of not having a trading plan. So, what does an average trader do? An average trader wakes up at 8:45, 9 in the morning. He opens his phone up, scrolls down the world markets. He sees what the Asian markets are doing. He sees the markets are in green. Then he opens SGX Nifty, and even SGX Nifty is trading in green. He opens the Dow futures, the Nasdaq futures. He sees everything in green, and accordingly, at 9 o'clock, when the pre-markets open, he decides that today I'll be a buyer in the market, and when markets give me a good level, I'll try to buy the markets and make money. Just to realize when the markets opened, they opened higher. He was a buyer in the markets, and the markets immediately crashed down, and he lost the money. If you haven't lost the money yet, if you are doing exactly what I've just talked about, if you are making the money still, I would say you should consider yourself extremely lucky and extremely fortunate. I don't want to be pessimistic, but I want to tell you that precaution is better than cure. You have to, employ what I'm going to tell you right now in your trading journey so that you can make a consistent profit. Without a trading plan, you might be able to make money for a week or maybe 2 weeks. But if you have done that, you might probably lose everything maybe in the next couple of days. So let's get into it without further ado. Warren Buffett rightly put it that market is a device to transfer the money from the impatient to the patient. That's where the trading plan comes in. So a trading plan necessarily means that you decide what you want to do in the market, I would say a day before. This is very important. Objectivity in the markets are quite important. So what do I do? I'll give you a brief about what am I doing in the markets. So maybe around, I would say, 9 o'clock or 10 o'clock, somewhere around this time, I open my laptop, I've had my dinner. That's the time I would like to reflect what I want to do tomorrow, how my day should be. And around this time, I basically analyze the stocks I'm concerned with, maybe the major global markets. I make the levels and then I go to sleep. So when I go to sleep, I know exactly what I am going to do tomorrow, and that's exactly what a trading plan is. A trading plan doesn't mean that you predict markets are going to go higher or markets are going to go lower. That's not a trading plan because markets are supreme every time. Maybe if you might be a good analyst 90% of the times, but there are 10% of the times the market will prove you wrong. So you have to understand that issue. Also, the trading plan comes in importance due to one more fact before I tell you what I'm exactly doing, and that is I'm going to give you some percentages which you'll find very helpful. So, if you have done mentorship courses from people from us, maybe if you have watched a lot of YouTube videos or read a lot of books, you might be a 90% capability technical analyst. You might be a very, very good technical analyst. You might be giving really good technical levels, and I don't deny that. That's very good. What happens is when you enter a trade, so you might be very good, but when you enter a trade, let's say when you press that buy option on Reliance, your capability goes from 90% that very second all the way, I would say, to 70%. What's the reason behind this? The reason behind this is When you were not taking a trade, when you were analyzing the charts, one night before, you were very objective. But when you press that buy or sell button, you become less objective. Because of this reduced objectivity, you are not able to see the facts. You are not able to read the news, interpret the news, convincingly. When you see the charts, you know things are going to break down, but you want to hold that thought against you. So that's the thing. And finally, when you see that red, you see that loss on the screen, your objectivity goes from 70% all the way, I would say, down even to a whopping 40%. So you are 40% objective only when you see a loss on the screen, and all you can think of is when should I cut the loss. And the biggest problem right now is the human psychology. Our human psychology is very simple. What does it say? When you see a profit on the screen, immediately cut it because you want to get that profit. And when you see a loss on the screen, you want to stay in that loss for as long as possible. That's the biggest problem, I would say, that comes into the market. We cut our profits quite quickly, but we let the losses run. That's the reason we let our accounts blow. That is where the entire idea of trading plan emerges. So what I do one night before is I like to make my levels on the charts I am concerned with. So for example, I love to trade commodities, maybe from 1 o'clock in the afternoon to 6 or 7 in the evening. That's a time I think it's very good for commodities. For me personally, a lot of people like to make money in commodities after 7 when the American markets open. So it's totally up to you. So what I'll do is, for example, if I want to trade commodities, I'll make my levels right now. So this is the charts of natural gas futures, the October current contract. So looking at the chart, I can just, I'm not predicting, I'm making my levels. So what I'll do is I can see very well the 200, it's a round number also. It's acting as a very good psychological support and resistance. You can see a resistance here, and now it has become a support. So what my plan says is that if tomorrow natural gas takes a dip below 200, I want to go short on natural gas, no matter what the ticker is saying. The ticker might say -1%. It's not because of that I go short. It's because my trading plan said that tomorrow, if natural gas, if is important, if natural gas goes below 200, you have to go short, maybe for a target of 196. I think that's a very good fair target. 4 rupee move in natural gas is not very difficult. So if natural gas comes here, I want to book. It doesn't mean that tomorrow, if you take a trade, you want to be greedy and maybe go all the way to 186. It might happen 1 out of 10 days, but you have to be a consistent trader. That is something which is very important. So, on the downside, I'm quite sure what I want to do. At the same time, I also see on the 15-minute chart a sort of a resistance coming in. I can see a descending triangle kind of formation giving me lower highs, lower lows. So I know very well below this level is a breakdown. I want to go short. At the same time, if I go above the levels of 203, I would say I want to be a buyer, because then the descending triangle breakdown will fail. It will give me a breakout which can give me a movement maybe till a level of 205.4. So see what I've done. I have made a plan that natural gas, I've marked natural gas that I want to trade tomorrow. It's at a significant level. I've given the level on the downside, given a target on the downside, given the up level on the top side when I want to buy, as well as a target on the upside where I want to book my profits. So no matter where natural gas goes today, I am going to make money. As simple as that. So tomorrow my job is not to predict by looking at the watch list what the ticker is saying, -4%, +4%. But when my levels are coming, I am taking a trade only then. And this is very important. You take a trade only when these levels are crossed. It doesn't mean you take a trade when natural gas is trading here, because for me tomorrow that is a no trading zone. I hope these points are clear. Let's give another example, maybe the charts of Larsen and Toubro. Great stock again. I'll open the daily charts. I've been analyzing this for a while now. So what happens in Larsen and Toubro is you can see quite clearly it's kind of a double bottom formation on your daily chart. Also a resistance comes in around, I would say, the 910 levels. So tomorrow my trading plan becomes quite easy. So if I can go above these highs of today, which are set at, I would say, 914, I can be a buyer of Larsen and Toubro because the double bottom would be triggered. And for me, that is a good entry. Double bottom and double tops are good patterns that work, and I can actually go on the long side, maybe for a target of 940 on a positional basis, because I'm looking at the daily chart, not an intraday chart. At the same time, I also make it a point to set the level on the downside, because it is quite possible, let's say, maybe one out of 100 days markets crash tomorrow. So you want to know what you want to do in those situations. So if, let's say, market goes below this trend line, maybe around 890, that would be a trigger for me to go short in some quantity, and I would like to go aggressive short below 880. So see what I've done. I've made my levels on both the sides. When these levels are triggered, I want to make money. Otherwise, I'll be sitting out. I'm not going to trade today. And that's the biggest problem. People, an average investor, when he comes into the market, he comes with a mindset that I want to make money. No matter what, wherever the market is, I want to make money. But that's not what it happens. You have to understand trading is not a easy money game. If it was easy, everyone would be doing it and everyone would be successful, but that is not the case. You have to understand that. So it requires patience. You have to get your levels and then only trade, right? So I hope this trading plan idea is clear. Also, I would suggest you can try to create something that I call a trading journal. There are a lot of formats available, or you can design your own journal. A trading journal basically is like a log for your trades. If I take a trade on Larsen and Toubro, I would mark it in my journal, giving the date as tomorrow is the 12th of October. So I'll mark the trade at 12th of October. I bought Larsen and Toubro. What were the levels? What were the targets? What was the strategy I used? What was the SL I used? Accordingly, after a week or after a month, I can calculate what's my profit ratio, how many trades I've taken hit a SL, etc., etc. So these are two things I would recommend you try in your trading journey. I think this has helped me a lot. It's made me a very good profitable trader, and I think it should help you too. Right. Let's come to the second question. How do I choose my stocks for intraday trading? Okay, this is a topic I've already discussed in my previous YouTube videos. So if you haven't seen that, I would recommend you check that out. It's called How to Select Stocks for Intraday Trading. So just to give a quick recap, I use this concept called the fundamental catalyst approach. It's a very good concept that I adapted from America. So what happens is I'm only interested in those stocks which are fundamental catalyst. Fundamental catalysts basically mean stocks that are in some sort of news. So if your stock is in some sort of news, it will be trading at a very high relative volume. And because you have a very high volume trading on that stock, this will give you volatility for you to make money, because you can go buy on that share or go sell on that share depending upon the technicals and accordingly make money. So please don't get me wrong. It doesn't mean I'm trading on news. I want to make that clear. So for example, if let's say a news comes out of a company which is positive, it doesn't mean I buy that company. It clearly means I'm just selecting that stock and then using my technicals on that stock, giving me levels and giving me where I have to take a trade. The reason I use the fundamental catalyst approach is because I want to trade in those stocks which are trading at a higher relative volume. And when the stocks trade at a good volume, I can make my money because the movement in those shares are going to be quite good. So some examples of fundamental catalysts can be earnings. So currently we are in the earnings season. So Wipro, Infosys, Mindtree, Larsen and Toubro, Infotech, these companies post earnings this week. So these stocks will be in focus. Another trigger could be for the pharma companies. We have a lot of US FDA approvals and disapprovals. So if you are in our WhatsApp community, we just gave a message that this company Shilpa Medicare has got a warning letter from US FDA. So automatically Shilpa Medicare becomes a fundamental catalyst and it will be trading at a relatively higher volume. Whether it goes higher, it goes down, I'm not concerned. My levels are fixed. When my levels are crossed, I take a trade accordingly in that direction. So a lot of people, which I've seen on YouTube, what they do is they suggest that we'll go look at the top gainer and top loser stocks on Money Control and NSE website and trade in those stocks. So you have to understand, why will a stock be a top gainer and top loser? 90% of the times, your stock will be a top gainer or a top loser if there is some fundamental event triggered in that company, and that fundamental event is nothing but your fundamental catalyst. And with this approach, we are basically covering everything that you have learned. So I've given a technical name to the entire concept. Use the approach of fundamental catalysts. There is a detailed video of this concept on on our YouTube channel. So just scroll back a couple of videos and find that video and see in detail. One question I get asked a lot is, what is the source that I like to use for my fundamental catalyst method? Do I use Money Control, Economic Times, etc.? So basically, we have a stock market community. If you're not already in it, I would recommend you just WhatsApp us or message us on Instagram. Our WhatsApp number is 8080343031. So in that community, we provide real-time stock market updates, broker research, reports, recommendations, analysis, etc. So using that, that's actually my source of where I get my news from. So we have got tie-ups with a lot of people in the world. So we do get a lot of news before others in the field. So just I would say, come join us in that community, and we charge about 500 bucks a month only, sorry, 500 rupees per year. So that's about 150 rupees for a quarterly membership. So we provide two memberships. We have a 500 per year membership, or you have a 150 per quarter membership. So you can try both the memberships out, whatever you feel. But that is my source where I get my news. So any live updates, any research, any reports will be coming in that group in that time. Coming to the third question, that's I would say the most important question, which is, how do I set my SL? So that's actually a very deep topic if you ask me. Stop loss is one way. It's a very deep topic in my opinion, and there are actually lots of ways you can set a stop loss. There are tons of ways, and in our mentorship program we do talk about a lot of them. But I'll give you a couple of ways which will help you trade. So before I get started with that, because a lot of people give random that put a percentage SL, which is fine. You can put some percentage SL or maybe a 10 rupee SL for a stock, etc. That is fine. But let me give you a definition what a SL is. So after listening to this definition, I think your doubts should get clear. Stop loss basically means it's a area, it's a zone where if you are entering that zone, your trade idea goes wrong. So let's say I want to trade Larsen and Toubro. I'll come to the same example. So what is SL again? SL is a place, if you come there, your trade idea which you initially started goes wrong. So if I look at this example, I see a double bottom kind of formation. It also looks like something like a ascending triangle till now. So my trade gets triggered if I go above the highs, maybe around 914. It gives me a good positional trade. So one option of a SL is what? Just use your mind. What's the area on the chart where if you trigger, you go wrong? Is it this area? It's not. Sorry, it's not this area. A lot of people say put a 10 rupee stop loss, but this is going to get you rubber band snap. It's wrong, because it's very easy or it's very convincing for you to go down again to the trend line and then break out maybe. Because currently we have a power move, so it's possible you do come back, retest that support and then go higher. So what is a logical place of SL? A logical place for SL in this example would come somewhere here, 880s, because you know very well if you go below this, not only do you break the trend line support, but you also make something like a double top formation, which is a bearish pattern. And if you enter this zone, that's a place where your trade idea goes wrong and you no longer have to be bullish in the market. Correct? So if that is a logical SL that has to be. The reason why people go wrong is because they are not able to define SLs, and what they do is, considering the limited capital some people have, they'll try to have only a 5 rupee SL for a stock like L&T. You can't do that. If you do that, you'll probably get stopped out. A lot of traders do not have SLs. There is no problem in that. But for a new trader, if you're watching this video, I will recommend, if you don't keep a SL generally, try to keep a loose SL at least. The reason is because sometimes markets do crash, and if that events happen, at least you'll get stopped out after some point of time. I know a lot of investors and traders who don't like to keep SLs. It's nothing wrong in that. It's not a wrong concept of not having a SL. It's totally how you're comfortable. But I would recommend, so rather than not keeping a tight SL here, you can probably keep a SL somewhere at 850, because below this level you're going completely wrong. I hope you're understanding my point of view. So a couple of ways of keeping SL. I'll give you two, three easy ways. One of the ways that I like to use is called the ATR. It's called the average true range. It's an advanced technical analysis concept that is something you should know of. If you know this already, I would say that's the best way to put a SL. Otherwise, if you want things to be simple, one way of SL is below a trend line. So let's say this is my trend line LNT. My SL can be somewhere around here. The other way is the SL can be below the previous high or previous low. So for example, you can see this is the previous low, that's the SL. Let me give you another example. Um, so for example, let's open some, yeah, so if you're going short from this time, you see a bearish engulfing, or let's say you see a shooting star candle here on LNT around 7th of May and you want to go short. So my logical SL will become somewhere at 8 or 950. So at 950, my logical SL will come. The reason is because that's the previous high. So either a previous high or your previous low can become a SL depending on what trade you are taking. Number one. Also, you can use moving averages to point out SLs. It can be a 20 MA, so I'll put the Bollinger Bands up. So if you are in a good trending market, Bollinger Bands do give you the 20 MA basically can give you a very good position where you are expected to go. So example, you can see a good example. You can see a 20 MA resistance, a bearish engulfing. So your SL can be just above the 20 MA to have a tight or a very strict SL. So that these are 3 to 4 ways which can help you put logical SLs in place. I hope you find that helpful. So these are the 3 things I wanted to talk about today. If you have any questions, feel free to message us on Instagram at the Financial Analyst. Get in touch with us on call at 8080343031, or you can leave a comment. If you like the video, make sure you smash that like button. If you didn't like the video, just subscribe to our channel. I think that will suffice for us. And any questions, message us. Don't feel shy. Feel free to do that, and we'll make a video on your doubt to help you in the trading journey that you're in. So that's it for now. Thank you so much.